Hey everybody, Preston Brent here with our Trader User Group weekly roundup for the trading week ending August 8th, 2014. What I thought we'd do is go through each of the major indices on here, and then we will take a look at some of the key S&P 500 sectors, just to give you guys an idea of what we've been through for the past few weeks and what type of technical damage has happened to a number of sector ETFs as well as the indices. Now, for our members, we've been aware of a coming pullback. I think most people in the markets have been anticipating a pullback, but we had specific triggers, specific actions to take, and a lot of our members have done very well. Now, what I wanted to do with you on this weekly update is just kind of give you a quick summary. And why don't we start here with the S&P 500, which I always do. So let me get that back on the screen here. And we're going to go take a look at the weekly chart here, just to kind of round things out. Or let me go to the cash index so it's a little bit less cluttered on the chart, I guess. So the SPX. You can see on this cash index, again, looking at the weekly chart here, what I want to highlight are just a couple of quick things here. You can see on the chart I've got some shaded zones that represent major support zones if the price continues to fall down. You can see here we would call this an S1 level or a first level support, S2 level, and S3 level. Now again, these levels are defined on the time frame that you look at. In this particular case, we're looking at a weekly. So it tends to go out much further in time, up to a year and a half or 2 years. But you can see on this weekly chart, we were getting this divergences. And as a lot of our members know, divergences are outstanding trades to take, coupled with some of the things that we do with our charts and some of the triggers that we use. But you could see a little bit of this divergence showing up here on the MACD, from this high point here of 1849.44 up to the recent all-time high of the SPX, 1991.39. Didn't quite make it up to the 2000 mark, which I had here as a major resistance for us for what I would consider our R1 level, our first level of major resistance. But you can see that we just punched right through it. Or not quite punched right through it, and then we just started to roll. We started to give it up, and now we came down to a near-term support level, which would be more identified on a daily chart. Okay, but this is the SPX. Now, if we come in and take a look at it on a daily and just zoom in a little bit, we'll keep the same indications on the screen here. You can see where we sat, and you can see on the daily now we've got bearish divergence again, but it's a lot more egregious, meaning it's a lot more severe. You can see here from this point here, every time we hit a higher high, right, and then we just came up here to this 1991.39, every roll in the MACD was constantly going down. So in this particular case, it showed up much more dramatic on a daily chart, and we were seeing this, and we were aware that we were going to get a pullback. Now, divergences don't measure the extent of the pullback. We use other tools to take a look at that, but they do give you an indication of pullbacks that are coming. We came right down. I had predicted we had a 1897.28, and we came down right about 1900, just shy of 1900 on the cash index, and then we're finding a little bit of a bounce here. Now, what concerns me is you can see the severity of this down move here. Typically, when you have a momentum move like that, you generally have a little bit of a pause in a retrace, and then you determine, are the buyers going to win out and believe in the markets and then take it higher like this, or are the sellers going to win out, overcome the buyers, and take it back down and do another double test down here? Now, of course, nobody knows, and I know you can turn on TV and see what all the talking heads are doing, and you'll find one side of the table is saying, we're going in this direction. You'll find another side of the table saying, we're going in that direction, and they're all, bellying up to the bar for bragging rights if they're right. Someone's going to be right, of course. We don't really play the markets that way, because then you're just guessing, you're flipping a coin. What we want to do is look look at some key indicators here. And most of as members, we dial it down. We'll do a multi-dimensional time frame analysis using charts and price action, and then we usually, and when I say usually, we gain a little bit of an edge in the price action, and we're on the right side of the coin. If we happen to guess wrong and our bias is off, we're usually out of it very quickly. We know that very quickly the way we use our charts. But right now, the momentum is going to show that we're going to continue up on Monday. As you can see here on the SPX, we've got this 50 EMA that's just sitting just north of us around 1944. So let's see what happens when we come to that. Now, if we look at the other major index, which is the rut, and I've pointed this out many times, we're going to come back to the weekly and the rut. We're going to step out. Let me just put some perspective on it. Well, let's step in a little bit. You can see on the rut here, we've come down, and we've got these two key points here that we've tested. And we've tested it multiple times. And as you guys know, a classic definition of a support level or a resistance level or a trend line for that matter is to have more than two touches. I mean, yeah, it takes two touches to form the resistance or support level or the trend line, but it takes multiple touches beyond that to really give it some strength. And you can see here now, this is a weekly chart, but you can see that we just spent, in that case right back over here, we spent almost a month at that level before we could finally break through. And then of course when we broke through, we came back and did a multiple 2-week retest before we were able to get some escape velocity. We got up a little bit, we came right back down, tested it again, and we had a pretty good hard one. Then we came back down and tested it again. In fact, we spent 3 weeks down here. So what do you think about this level, guys? Well, it is a solid level. And as chartist and looking at this, when you break a solid level, as they say in the military, Katie bar the door because it's going to run quick. Now, we've supported it, so that may suggest that we're going to get another support. But you can see on this weekly chart, we're at this hard down level right here. Now, again, it was telegraphed. We had this here, and we had a little bit of a higher high here like this. And you can see as we're making this run up this trend line, it's just rolling over like that. So we get, as our group calls it, we got a bed. We call it beds and buds. And this bed here is a bearish divergence in the indicators. So we knew to, take a look at our time frames and jump in and take advantage of it. Now, the other thing that we also knew is Russell tends to lead the way because it's small cap. So if I just zone in on this daily, you can see right here with the same indicators on here, man, we just had some bearish divergence just push this thing over. Now the Russell leads the way as I indicated. So we had multiple tests here. Then we came back up and actually made a little bit of a higher note there, and you can see this bearish divergence setup. And as I say, you do not know the strength of a down move or an up move with a bearish or bullish divergence, but you do know it's coming. And again, we can take advantage of that with the way we look at charts and different time frames to give us some support and resistance levels. Now, coming into Monday, the bias again is up on the Russell, although we're in a down mode. You can see that we've got a couple of key pivots here that we're going to be looking at in the Russell. We're sitting right around 1131.42, and we got a number there that we're going to be watching very closely, 1150.61 to be exact. But we are still in a down move momentum time frame. We came back and regained the 200 EMA, which is the yellow line. You can see the vector on the 50 EMA coming down hard. So we're going to have a moment of decision right here. And again, just like the S&P 500, are we going to go in this direction, right? Are we going to take it out? Buyers are going to win out? Or are we going to start to roll back over in this direction? Check that little interim pivot there, then come down and check this hard stop right here. Time will tell. We trade, as we always do, 1 day at a time, or let me rephrase that. We trade 1 bar at a time, and the bar determines the strategy that you're going to use, or the time frame on that bar. In this case, it's a daily strategy. If we come in and we look at the Dow, the Dow really had same thing. Let's jump out to the weekly again, take a look. you can see here the weakness just setting up dramatically here in the Dow. I mean, in many instances, the Dow gave us a more perfect bearish divergence setup than the other markets. And the Dow has fallen pretty hard over the past 4 weeks. But you can see that right there. And again, MACD, you can see the moving averages. You can see how this thing is sitting here. And I've got a Fibonacci pullback here, and you can see some key areas with the fibs. Now I use 0.236 as, and then the natural fib level of 0.382. But 236 is a very good common one. And again, this is a weekly chart, so just understand the timing involved. But if we jump into the daily, you're going to see here on this daily chart, the Dow is just, it's not as clean. I mean, we do have, over the past 3 weeks, we had a little bit of a clean action in some of the MACD divergences here. You can see here as we making these new highs and we come right up to this area here, you can see a little bit of a turn like that. So we did pick this up, and then using our different time frames, we were able to come in and play it. Of course, we're sitting just north of the 200 EMA. That's still got a little bit of an upward trajectory, but it's starting to flatten. The 50 EMA's got a downward trajectory. So this does tell us the momentum is going to be up for Monday. But again, like all the other indices, we're going to come up and we're having a moment of decision here on whether we go higher or we go lower. We do not know. We've got to take this and be very careful in our trading. Don't get suckered in with Friday's move. And then finally, the Nasdaq, which has been the strongest, I might add. If we come back out to the daily on Nasdaq, you can see on the daily here. Again, we could see it coming, or on the weekly rather. We can see it coming with the divergence that we've got here. We had a little bit of a divergence right there, and we got a little bit of a pullback, came down and hit very nicely our support level. And you can see multiple touches here. We spent almost a week and, a month and a half at that level there before we were able to get some escape velocity. But naturally, when it's very strong like that, it just acts like a magnet. We come out and test it again. We come down and test it again. And each time we're making higher highs, yet we're starting to roll over in the MACD. So each thrust higher is met with a little bit less strength as we move up. And then we get that final oomph right there. And again, when it starts, and again, this is a weekly chart, so we have not gotten confirmation on a weekly yet. And the Nasdaq has been the strongest. You can see there's still an upward trajectory in the 50 and the 200 on the weekly chart. So this would suggest, and we've talked about this in our membership group, that Nasdaq has just been very strong, and technology has been very strong. If we look at the daily, you can see right here, we had a nice little signal here. Again, on the daily, and keep in mind that NASDAQ is the only one really that's regained the 50 EMA. 200 EMA still has an upward trajectory. 50 EMA is totally flat right now. But we had that bearish divergence that just set it up, and then we just about made it back up here, but we had a more severe divergence there that said, okay, this thing is coming. And then we just took the shorts. But again, in this one right here, not as much so the other indices. This one would seem to indicate that we may have the impetus to come and take out that level and go a little bit higher. But we're going to have to follow this and see, because if the other markets give it up, then we're going to see the NASDAQ composite give it up as well. So that's a little bit about what we're seeing there. The other thing that has been introduced back into the market is volatility. And if we come in on volatility, I'll kind of show you a little bit of a benchmark here on, is it going to get a lot worse, or are we going to have a quick pullback in vol? You can see right here, we've just been, in a very tightly wound box right there. You can see that box is supported by an area that has had key support and resistance. It's at 1538, okay? So this level right here is kind of a line of demarcation. If we can give it up, we'll move very fast down here. That's not to say we're not going to springboard back up, but volatility does not tend to move up slowly. It moves up fast, and then it falls depending on the extent of the extension of the move up. It can fall just as fast. Now, we've held this level right here for the entire week. Over a week, we've been north of this 1538. If things settle down and traders feel that leading into the last half of August, things are starting to calm down geopolitical wise. I think we'll keep this down below this 1538 level. But we're starting to get flare-ups over in the Middle East. In Iraq, we've got the Russian potential border incursion. So that's probably what's kept us up at this area as long as it has. If we break through it, it will move in spikes. You can see if I were to draw a line over here, going all the way back to the fourth quarter of last year, almost 1 year. Every movement that we made above that level was not a gradual movement, but spikes, which is a fear is what it would be. So if we do get a movement up, it's going to be fast and furious, and that'll give us another 100, 200 point down move in the markets very quickly, all right? So that is, what we're looking at. And these spikes, you can't plan for them. They're just going to happen very quickly. If you're trading an equity stock, even if it's a good stock, it is going to fall hard. You've got a higher correlation when volatility goes up. And it does not become a stock picker's game. What happens is everything falls, but then it becomes a stock picker's game to invest in those better securities that look like you can pick them up a lot cheaper. And we'll be looking at that for our group here. But this is where vol is right now. Where do I think it's going to kick off next week? Well, if vol stays up at this level, even though the equities are starting to move up a little bit, it's a little bit of a concern to me. Because we have been below this level generally for quite some time, for over a year. And only when we get north of this level does the market get a very skittish feeling. Now understand, August is traditionally not a very good performing month for the U.S. markets. It's a big vacation month. Most traders are out, so it's less volume, which means markets can kind of get kicked around a little bit more. And for our user group and our weekly financial roundups, I'm going to be on vacation the rest of this year doing some seminars in Europe. And it's going to be a working vacation, but more vacation than working. So we will pick up our weekly roundups starting after Labor Day holidays here in the U.S. The beginning of September is when we'll be back in play here. So this is a little bit about the volatility. And then if we take a look at some of the key sectors, you can see right here, we'll start with utilities. Gave it up dramatically. Huge move down. Now, utilities tends to run with bonds. We had a separation in the utility market and bonds. I think bonds are a little bit overextended, but it shows you the extent of nervousness over in Europe and Asian markets, because a lot of that money that's keeping bonds up right now is foreign money. But you can see we had beautiful signals here. We took out both the 50 and the 200 EMA, and now we're gradually moving back up here. But again, it could be a possible rollover. Energy markets, same thing. We saw the sector rotation. I was telling our group, get out of energy, tighten your stops, because energy has been a great performer for us, but it started to give it up. So we're going to watch energy, but it's been damaged as well. If we look at consumer discretionary, this is a classic risk-off. A risk-on type of trade here. 200 EMA has held up very nicely, this yellow. So, and we just barely clawed our way back up above the 50 EMA. If the consumer discretionary and the MACD is underwater, so this would suggest we may make another final attempt at a run and then a potential roll. We got to watch it very closely here with the discretionary. Industrials, same thing. I like the way the 200 EMA held up in the industrials. But again, like the other indices, industrials has been hit very hard. Companies just aren't spending money. It was bullish that we saw labor productivity here in the U.S. increase in one of the reports, government reports at the end of the week. So that's a good thing. But watch that 200 EMA. You can see it right there. I mean, we had a good hard move up. But again, the momentum is clearly in the downward direction. So I'm looking at industrials from that perspective. Healthcare is another one that is traditionally a little bit stronger in times of weakness, but we got a beautiful signal to the downside. We're below the 50 EMA, as you can see. So I think the bias is going to be up for general most markets. So we're going to see that next week. But again, my fear is going to be another rollover here. Um, if we look at the material sector, you can see here, same thing. Everything is, we had all these divergences. We had a lot of bearish divergences setting up, folks. So that was our clue to start picking up puts, start picking up shorts, start tightening stops on things that we've been long for a while. So this is kind of the materials has pulled back a little bit, but materials has been a little bit stronger than most. You can see it's sitting right on its 50 EMA, so we're going to watch that. Consumer staples, which traditionally is a risk-off kind of trade, you can see here it's held up nicely on the 200 EMA, but it is below the 50. So we're going to have a lot of challenges here coming up this week. Can we regain the 50 EMA in a lot of these sectors? That's going to be important, folks. You got to watch that. Financials, well, interest traditionally, when interest rates are very low, financials underperform dramatically. But everybody believes interest rates are going to be moving up over the next 36 months. So I think financials is going to be an unsung hero. Timing isn't right now, but watch it. We've had a pretty good downdraft in the financial sector. And then technology, which has been one of the stronger sectors, is one of the few sectors that's over the 50 EMA. I think once the market takes hold again, we're going to see technology run very strong. But again, we had the signal to go short. So none of this should come as a surprise for our members. As I said before, I'm going to be traveling throughout Europe, doing some seminars. I'm going to be on vacation. We're not going to do another weekly roundup until after Labor Day weekend, so that'll be the first Sunday, or I think it's September 7th or 9th or something like that. That'll be our next weekly roundup. For our members, we've got tonight's Secret Trader session to take a look at for next week. If you're not a member, I'd highly encourage you to come over and take a look at our website. Go look at our special offers, because we've doubled in size, and we seem to be doubling. We are adding a lot of folks, which is really good. I'm glad we've had a lot of members come in. We trade all of these markets. We trade equities, commodities, futures, options. We do a lot of option trading. So, folks, I hope to see you on the inside. Otherwise, everybody, I hope you're enjoying your summer, and I will see you guys when I get back from Europe in early September. Have a good one, everybody. Members, I'll see you tonight. Bye now.